Welcome everyone to Admiral Markets. Thanks for joining us today. Again, a new week, the last week of May in fact. So before we start to look at the price action, as always, this PowerPoint just explaining some basic things, but also important things, like for instance this disclaimer. This one, to be precise, online material here is developed by Admiral Markets Estonia for a global audience. Please take into account that the info in this session may not be suitable for everyone. To get the corresponding information on charting conditions and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. By continuing watching this webinar, you agree with the disclaimer and the content mentioned here. And we do thank you, as always, for your attention on this important topic. So with those disclaimers behind us, what are we looking at today? We're going to take a look at reversal trading. That's a bit non-typical for our normal webinars. This is throwing a bit of a twist in it. We're going to take a look at to view if we can take some reversal setups or find them, I should say, and then trade them. When looking at reversals, just like with trend trades, basically we're still defying the trend. And why is that? Because if you're trading against a trend, well, first of all, there should be a trend. And if there isn't, then it's probably a range or a consolidation or some chart pattern going on, but not a trend. So ironically, maybe in a way, if you're looking for reversals, we're looking also for trends at the same time, ends of trends to be precise, of course. An opportunity, for instance, when you're trading reversals, could be divergence. Obviously, divergence is very important when trend trading. If there's divergence in play, multiple divergences, double divergences, divergences on different time frames, then the likelihood of a reversal or bigger retracement going on increases, and that of course aids and supports the potential of a setup. Filters could be, for instance, news, as always, but it could also be the lack of a support or resistance close by. Obviously, there's a bigger chance for reversal if price is close to a major support or resistance level, so that would be a filter, the lack of support or resistance close by, for instance. The trigger could be a price action signal, a price action candlestick pattern at that support or resistance, for instance, and an entry could be the break of a candle low or the break of a fractal on a lower time frame. These are particular configurations that can be used when reversal trading and using these steps, this checklist basically, prior to entry. Now for reversals, all of these tools that we normally use can be used, like the AO, the fibs, the trend lines, the moving averages, candlesticks, momentum, all that can be used. Admiral Markets and social media, make sure to check it out. And with that said, as always, we just take a look at what's going on with our Forex calendar. We have ECB Draghi speaking, but it's far from now. We actually don't have much Euro news, Italian consumer confidence, pound mortgage approvals, Swiss employment levels 26. Otherwise, we have U.S. news mostly and the ECB president speaking. Now, with that said, we can head over to our charts and take a look. What's going on this euro, for instance? Euro dollar making some fall this morning after it had divergence between these tops. So in that regard, it's not so surprising. We also had a lot of momentum to the downside. The bears are in control at the moment. If you look at the hourly chart, we have lower lows and lower highs and lower closes as well. But this hour is showing some fight. This particular hour is showing resistance with a wick at the bottom. So 11 more minutes and we'll have a bit more idea on the tug of war that's going on here on this hourly chart. Primarily, what I would like to see, if this is going to be a bullish continuation, is a close above this 57 level. Price is struggling to get above it, as we can see. So far we've had, as I said, very clear lower lows, lower highs, lower closes. So that's a momentum to the downside. But if we break last hour's high, and specifically, I would say close above last hour's high, that changes the condition here. That changes the environment. It's a switch or shift of gears, and that could be maybe then in that case see some breakthrough to the upside. Price had this momentum, and price did retrace all the way back to the intermediate moving average, right? So the question is if we can follow through and head higher. Where's the long-term moving average? Let me check. Long-term moving average, oh sorry, that's right here. That's still far away. So if we break above, we have that potential to move up to resistance and continue maybe even higher. Why? Why is that possible? Well, because price has already fallen a lot. It has moved a lot. It has hit the targets as well. If you put a fib target here like this, very close to the minus 618. Didn't quite hit it, in fact. Missed it by a bit. Bearish momentum on this 4-hour chart, as we can see, right? So there's always that chance to continue. But we do have divergence between these bottoms. Look at this. This leans and this double divergence on the hourly, single divergence on the 4-hour chart between these bottoms. So check out the difference between this bottom and this bottom on price is absolutely a lower low. Check out the oscillator is absolutely a higher low, right? So there's divergence on the 4-hour, there's double divergence on the hourly. The daily chart is still building to the downside though. Also, one thing is true is that we've broken yesterday's high and Friday's high. Another reason that we're getting maybe into a daily momentum shift, right? Just as the hourly could be breaking a high, that's what happened with the daily chart as well. So any dips here could be a reason for more upside if you look at it from the candlestick perspective. Obviously, we do have downside momentum on this daily chart, but we don't know how long it can continue, when it ends, and we have to keep an eye on the daily candles to know, how long this momentum to the downside can ride. And that might be actually, who knows, it could be finished right here, right? It could be finished yesterday or today when it broke through yesterday's high. So this is an interesting development. Weekly candle is a bit different. Weekly candle is showing lower lows and lower highs and lower closes. It's showing downside momentum. It's showing a break of this support level, in fact. So from a weekly perspective, very important level is last week's high, 137.35. Any upside that doesn't break 137.35 could still be a retracement on the weekly candle for more downside. Do you see that? So it's a bit of a mixed picture. I know it's difficult maybe to combine all these time frames, but that's just the reality of the euro dollar at the moment. And therefore, although we could see upside, we have to be careful of 137.35. When we get close to it, that could be a resistance spot for more downside as this weekly bearish momentum continues. So although the daily bearish momentum is maybe halting with the break of yesterday's high, doesn't mean that the weekly downside momentum, the weekly candles are not bearish still. So although we can make a retracement up to this top, on the daily chart it's a top, on the weekly chart it's a weekly high, we have to be aware of that and take profit probably prior to that 137.35, not to get stuck in some trade that is going suddenly to the opposite side. So yes, weekly momentum is down. However, when we zoom in and use the multiple time frame analysis, we can see the potential for divergence. So this is a pretty good reversal potential, isn't it? At least some reversal. Yesterday was a potential for reversal, although I didn't trade it myself because of the bank holidays, but we did actually move up. We did reverse. So yesterday and maybe today are good examples of reversal trades when looking at the weekly momentum and daily momentum. Obviously still down, but trading it to the upside has potential because of the daily break of the high, the divergence on the lower time frames, etc. So now that the environment is favorable, potentially, what could be interesting to see? What kind of setup could make sense to actually trade? There's always a difference, of course. Let's take a look. 15-minute chart. As I said, the close of the hourly high above the 36.57 could already merit an entry, in fact, upon the close, an immediate market order with a stop loss below these bottoms. That's potentially one way of doing it. The other way of doing it is looking at this 50-minute chart. And let's see. We got flat moving averages, but as soon as we have some momentum here, pulling the moving averages to the upside, yeah, I would like to see on the 5-minute chart the 21 cross the 34, and then the next break of the fractal could be a momentum break to the upside already. So I'm not sure if you know what I mean, but I'm looking for this one to cross this one, and price after that stopping, making a dip. We have a fractal. The break, when price breaks through that fractal, could be the entry with the stop loss below the bottom here of the EMA. Might be a bit confusing at the moment, but what we're basically trying to see is the moving averages aligned, price pause, and then continue to break. That's another way of doing it. Same could be true on the 50-minute chart. Now, anything prior to that is early, because any dip back now could see support like this, maybe a sort of a smaller inverted head and shoulders potential like that. But this typically and often is a bit more riskier than waiting for the momentum to go into your direction. All right, this is not a bad pattern necessarily. Could work out fine. So it is maybe worth hunting for even a long at 136.50. But there's always the risk that price just keeps pushing lower and lower, right? So that's one of the advantages of waiting for confirmation instead of the hook back like this. All of these are reversal trades on the higher time frame, basically, right? So just a different philosophy and different method to tackle the trigger and entry, basically. Let me see if I missed anything. Otherwise, I think we can move on. In fact, the hourly does have bullish momentum already. If you look at the 21 and 34 EMA, you can see it's bullishly set up to the upside. And yeah, we're very close to getting some kind of bullish pin bar, although, as I said, we didn't break as yet above last hour's high. So it's not engulfing twins, but it does look like a hammer or so at the moving averages. So that definitely looks potentially bullish. And that supports, if it does post like this, that supports the theory or the idea that if price retraces part of that wick, then we could see a bounce. Right? We see the moving averages aligned, so that's looking nice. So that's the pound, that's the euro dollar, sorry. Otherwise, I don't think I have much to add. Let me just, for the fun of it, quickly add, before we continue, let me just do some quick check if there are any questions. Yeah, we got one from Kaylin. Kaylin is saying that some traders think that this euro dollar could fall all the way to 131. Yeah, I mean, it's definitely possible. Why not, I would say. You know, I'm open to anything, basically. I wouldn't say that nothing is impossible. I don't think anyone can say that. Well, I would say going up to 160 doesn't seem likely, but yeah, it's possible. Why not, indeed? But what time frame? The more important question is, indeed, if so, any time frame you can look for. Well, then I guess it would have to be a continuous move on this weekly. We would have to see lower lows and lower highs fall one after another on this weekly chart. That's what I would expect. We could still have a bigger hook back like this for like a head and shoulders pattern, but and then move down to 131. But you know, this is we're looking at a pretty substantial time frame then in that case. I mean, it could take months. did they say when these traders were saying that it could end up somewhere at 131? I assume that they mean relatively within the next month or two, right? Not somewhere a year from now, because then all predictions could be correct, because then you could say, yeah, it's going to be at 129. Eventually, one day, within the next couple of years, it's going to be 129. So I'm assuming within a relatively short time period. If that's the case, then I wouldn't expect them to hook back to this level before falling. That would take too long. And that's why I would think you would have to keep an eye on this weekly momentum. You would have to keep driving, keep making lower lows and lower highs, basically, on these candles. Let me quickly, I want to just see where the weekly pivot points are, if you don't mind. 1 second. Now I forgot the name. It's this one. Okay. There it is. 1 second. I'm just curious for this euro dollar where the weekly, monthly pivot points are. So we have monthly, weekly, and yeah, we're right at, we respected the weekly, in fact. As you can see, we have the daily below us. The euro dollar, as we can see, didn't end up bullish. It looks like a doji, so that doesn't look that necessarily that bullish to me, right? We're still making lower lows and lower highs, and actually we still made the lower close. So this bearish momentum could still be continuing. However, the moving averages are to the upside. So I would say it's a bit of a conundrum. It's a bit of a stuck in two worlds. I would therefore be cautious. Either let price break to the upside or let these moving averages become bearish. That's what I'm looking for. If you look at the pivot points, basically we got the daily still below us, the weekly above us. We're stuck in between those two levels. And where's the monthly? The monthly is way higher. So you can see maybe if we break above daily R3 is at the R1. That would be the very max for today's movement, I would say. If we do break to the upside and break to the weekly again and the daily R1, then probably up to 137 is a reasonable estimation of what we could expect, because there we have some pivot point confluence. Let's see how that matches up with the Camarilla. H5 a bit lower at 136.85. Okay, that is below those pivot points. Alrighty, pound dollar. Pound is looking different than the euro, obviously, because although it had some bearish momentum, or not momentum, it had some bearish candles, I should say. Price just actually posted 3 minutes ago a seriously looking bullish candlestick. So that is looking more bullish, obviously. If you put the fibs on this chart, we bounce off the 886 fib, and we are on this 4-hour chart continuously pushing higher highs and higher lows. So this is definitely looking more bullish, in fact. It's quite interesting, though, that we already hit the R3 and are above the H5, so pretty trending mode at the moment. Interesting that part of it was prior to the European Open, actually, in the Asian session. Yeah, it's a bullish mode. The question is, have we already finished it, or are we still expecting more? I would say we can definitely expect some more upside. But we do have a bit of a wick here. Anything that maybe comes back to, for instance, 138, 168.60 could be a retracement for more upside like that. Could be a good hook back for more up. Moving averages are pointed up. Let's take a look at the 15 again. and now at the 5. There's a bit of divergence between these tops, so we could see some consolidation because of that. Doesn't be, yeah, I would wait for consolidation personally. I would like to see some consolidation and back to the zero line. This AO back to the zero line, fully back to the zero line. And if it then starts to make this break, pull back, and continue, then either continue, the break, all three could be potential possibilities. But I would like to see consolidation, and I wouldn't want to see any impulse to the downside. Otherwise, it's not interesting. If it does make a slow, tedious downside movement like this, and this goes to the zero line, and then we see some kind of impulse like that, then that could be interesting for upside. Now, if the opposite were to true, because basically, I mean, we can always plan for both sides in a way, to a certain degree, because there is some divergence. So we'll have to see if this if this were to break support here in a pretty impulsive manner, maybe some reversal today could be going on. What I would like to see with a reversal scenario, why do I talk about reversal? Because to me, the upside is in power at the moment, is in trend. So that's why downside would be the reversal. What I would like to see with downside reversals is the potential for price to break below 138.56. 168.56, sorry, these bottoms here. That's when basically the bulls could be losing control, because if you look at the hourly candle here, they're still in control, and by breaking that low, especially closing below the low, they would lose that. This is the 4-hour candle. Also, they would lose the 4-hour control. So I wouldn't be looking for any reversal trades as long as price is still above that. Looking for with the trend continuations as price makes dips close to that level for upside could also be another way of doing that. All right, so quick look at the daily and the weekly, and then we'll move on and look at the other pairs. But before we do that, then we'll take a look at Kalen's idea on the euro. 1 second. First is daily. We can see that yesterday's high was broken as well. Weekly chart. Weekly candle is a bit different. Where we had the bearish momentum on the euro, right, making lower lows and lower highs on and lower closes. With regard to the weekly candle, the pound dollar definitely does not have that. The pound dollar is actually has higher highs and higher lows last week, but it did have a substantial wick on top. It had a higher close too, so it didn't have the same bearish momentum. Would I say that this weekly candle is ultra bullish? No, because there's a wick on top as well, right? But you can see it's not as bearish, in my opinion. The bears didn't remain in control as much as, let's face it, as the euro dollar had. Obviously, there was some bearish pressure at the end because that's why we have that wick, but it did have higher highs and higher lows. So it's a bit of a mixture there. Back to the daily. Daily is breaking above. You see the daily broke that yesterday's high. We have higher highs and higher lows of bullish 4-hour candles. So I would really, before taking any downside reversal, would need to see a break of that support. And as I said, it could be worth hunting for a long, especially if you see consolidation for a while that doesn't break this bottom and this goes to the zero line. Okay, so enough said on that. If you need a recap, let me know. Otherwise, I don't want to repeat it too often. Not to bore others. Let's see. How would shorting euro dollar 36.40 after, let's see, 36.40. Let me see where that level is. That's below this bottom, okay? That's below this 50-minute bottom here. How would shorting the euro 36.40 after pullback, PBC, pullback, net break, pullback continuation in 50-minute time frame with stop loss above 55? It's one thing. What I don't like about it is that the pivot is still below it, and the moving averages are still not aligned here. The ones I use, at least. And the 1 hour is still in upward momentum too. That's why things seemed a bit more better if we were able to punch through it and hook back for more upside like that. Seem a bit more aligned to me. I do see, I mean, I can see what you are, I can understand, of course, the reason why it could be appealing to trade a break to the downside with this divergence here and try to position oneself maybe for a break to the downside. But because of these levels here and the moving averages and the hourly moving averages, I wouldn't be doing that one. What I would then look for is a break, pull back, and continue probably. So let's take a look at what should we look at? USD. Kalen's pivot is at 46 and L3 at 40. Okay, understand, Kalen. Yeah, those levels can sometimes differ. It's funny, huh? Well, if you have those levels higher than I can imagine, then of course it changes the outlook of what you're looking at substantially. And I can imagine that in that case, if you push through that levels, it seems to you like, of course, like a break, right? Well, to me, if we break that level, we have those levels still below it. So I can understand the difference in our views there, which is based on different calculations of these levels. However, still, despite the fact that our levels maybe are a bit different from each other, what I typically look for is the momentum still to be a bit more on my side, though, personally. So this is still sideways and not the momentum I'm looking for as yet, because they're not aligned to the downside, nor are they bullishly pointed up, although they are aligned to the upside because the 21 is above the 34. How you can see those differences in those levels, not sure. I guess it depends on, well, I guess if you would, I don't know, if you have the same broker, we should have the same ones. I'm not sure. It'll depend on the financial time, I guess, they use of your chart and mine. That's probably the difference, I guess. At the moment, I have here, this candle is 10 a.m. So audio is the slow corrective move up. Now, audio is moving up, but this could be a reversal potential too. Now, of course, I guess, in my opinion, it's going to be important to keep an eye on these 4-hour candles for some downside. You can already see a potential wick at the top here. Particularly interesting would be if we can close below this these 4-hour lows. If we can close on a 4-hour basis below 92.50, then looking for a retracement of that candle that can close below it about halfway with a stop loss above it could be a good way of tackling it, right? So let's say we have a close below it, and price retraces that candle, that bearish candle, and with the stop loss above it here and an entry here for downside, could be a way of trading the first momentum switch. Because otherwise, price, although it's very slow and corrective, price is still making most of the time is making higher lows, not many times higher highs, sometimes, and had a bullish candle, inside candle, and now is showing some significant problems, isn't it, with the upside. Also, from this 4-hour perspective, the AO is back to the zero line. So any dip down probably will bounce and have some bounce and then probably continue. And we'll see this AO probably go lower. And as soon as we break this bottom, we'll probably have divergence between these bottoms. And then we could see upside again. So trail stopping each 4-hour high makes sense so that you don't, you catch whatever profit can be made before divergence kicks in and sends this price higher. You then, traders can then capitalize on everything what the market gives. If it's a little, then it's little. Then the divergence kicks in quickly. If it's more, then the trail stop will catch more. 92.50 though is crucial on this 4-hour chart. Let's take a look at this hourly. Hourly, we can already see a big candle here, a reversal candle, but we do have that support factor close by. So that's a bit of let's say, a battle line at the moment for bulls and bears. We have bearish candles, but still bullish higher highs and higher lows. So there's a bit of a battle going on, isn't it? We could even use just a conventional trend line like this, for instance. A break of that line could also be a way of trading the downside. What else? How about if we don't break below that, right? Let's take a look at that. What's going on in the 50-minute chart? Pretty strong AO reading. Let me add a stochastic for the moment. We do have, you can see clearly this peak here above 80, and the second peak clearly not above 80, which is a very nice divergence, right? So, and we see a corresponding bearish price action. So I think the chances of a close below this 92.50 is pretty fair because of this divergence here. And if we look at the AO, we also have a bit of bad divergence between these tops. We have proper divergence between the 5-minute tops, but yeah, the hourly AO wouldn't show that as yet, right? It's just like, it's kind of like rounding, that's all. But the stochastics does show it. That's why I added it. But you never know. You never know if price can really push and close below that level. I think that is important, though. Let's go back to the 15. Because you never know, divergence is one thing, but sometimes price does push through further than we think, and we do still have everything bullishly aligned, don't forget. But upside, I would be cautious because of the momentum down and because of the divergence, so I would wait with that. Caitlin is asking 91.10 or 94.30, which seems more likely. Now, the only thing about downside that we have to keep an eye on is the fact that we did break through yesterday's high. Weekly candle is definitely bearish. So here, sometimes we have that bit of a mixed picture. What I would be certainly cautious of, if we do get any upside, is 93.70. Obviously, that was last week's high, and a very, very, very bearish candle. We've already had 2 weeks in a row, lower lows, lower highs, lower closes. Last week was a lower close. Any upside that comes close to 93.70 is certainly a potential resistance zone. We also have to realize, though, that price was not able to break through 92. So we got a clear bull and bear line. Don't want to make things confusing here, but just stating the facts. And we broke out of this option channel, though, with a clear weekly bearish candle. So long-term speaking, if I look at this weekly chart, I would say, Kaylin, that 90.10 seems more likely to me. So that, looking at this chart, I would say the odds are certainly in the favor of 91.10 at the moment. Now next week it could look different, but for this week that would seem more likely. But the question is, how much of a retrace do we get before we bump into that retrace resistance? Maybe this 92.80 is all it goes, all of the retraces. But maybe not. Maybe it goes higher. Maybe it goes up to higher levels, right? But looking at this weekly, we can see the break of the uptrend channel, in my opinion, together with the potential higher low here, with a bearish candle like that, there's a good chance we can break through 92, but you never know. It is a weekly support level, and sometimes we can build on a triangle like this and stay stuck here maybe for 2 or 3 weeks. Daily chart. Okay, despite as basically the same like the euro. Remember, we saw the downside on the euro, the weekly bearish candles on the euro, but the daily bullish candles, we had the same, in fact, here as well, right? Because today's candle broke yesterday's high. Doesn't mean, though, that today couldn't end up in with a bearish candle. Just proves the point, though, that we have to be a bit more. Let's not be too quick, maybe, with reversal trades, because at the moment we do have price is above today's open, right? We opened here at 92.40. Price has had a bullish mode so far, so you got to be careful with that too. That dips could be upside, and if you look at that, we can see this hour already posting some kind of bullish bounce, and a 50-minute chart is already above wick here, above closing above, or sorry, is currently above last 50 minutes high. So there's some momentum change. We had downside momentum here, right? Price is now trying to break above it. So yeah, we have to be careful with that bullish bearishness. 92.50, we have to keep an eye on. Otherwise, the upside, maybe, who knows? If price makes a consolidation like that, this goes to the zero line, we start breaking to the upside, might be worth it as well. But nothing higher than 93.50, 93.70. Your dollar is still bouncing back and forth. Pound dollar made a bounce still to the upside. Still looking for some bigger consolidation personally. Let's keep an eye on it. The dollar yen. Dollar yen is having some trouble with continuing further. It seems like it's trying to break out of that uptrend channel, in fact, like this, or has broken out of it already. Now, I'm not a big fan of the dollar yen in general, but if price were to make some bearish engulfing twin like that, then a retracement of that candle from our downside of that 4-hour candle could make sense, right? So that's something to keep an eye on. Let's take a look at the 15 now. And that retracement on the hourly for more downside could be something like that on a 50-minute chart. A hook back to the pivot, for instance, hook back to the broken trend line for that downside. Now that we've broken L3, And we have bearish momentum on the 15-minute chart. Look, we got bearish 15-minute moving averages already. It's something that certainly could make sense. You can see here we had some wicks, doji, and the close of this bearish candle below those lows, signaling the start of the break here, and falling ever since. So I think it's probably the best to keep an eye on the 4-hour here and wait for a retracement of that with the stop loss maybe above that. That could be an interesting break of this uptrend channel reversal setup. Why do I say reversal? Well, price was moving up prior to that, right? So that's why. Let's see. Let's continue with something else. I missed Kenan's comment. Yes, I think Kenan's talking about the Aussie. Indeed, good break of that weekly or daily uptrend channel. Indeed, good point, good spot. So what else can we look at? How about the dollar CAD maybe? I don't know. Or let's take a look at euro odd and pound odd. Those are normally always interesting pairs. First is dollar CAD, as anyhow I'm on this chart. Let's take a look at weekly, still in downside momentum. All right, we've got bearish candles. We haven't had a lower low for 2 weeks, but I wouldn't say that this is resembling any bullishness at all. Still more bearish than bullish at the moment on a weekly candle. Daily candle, we got definitely downside momentum. Yeah, there's definitely some good bearishness in this market. However, we are at L5 and close to S3, and the dollar CAD typically doesn't move a lot. Also, I would say we're relatively close to this support level. So the dollar CAD, with these two factors in mind, I wouldn't be looking to trade that actively at the moment. Let's see if the euro odd is a bit different. And then we can take a look at the CAD. We'll see Kaelin's has a comment on that, so let's do that after this one. Euro odd has always some potential usually because of its high volatility, big moves, so let's take a look. Now, weekly candles obviously have a bit of a different vibe at the moment. Last week was bullish close above the week's candle high before that. You see that? Just barely, but still. So that downside momentum didn't go all too far, did it? Right? Let's take a look at the daily. Daily has the opposite, has a downside momentum. One thing to keep an eye on is a trend line like that connects the tops. A break of that could be a breakout trade for some of you that like big trend lines like that. Otherwise, let's put a trend line here where we have the weekly low. Any move down could still be a bouncing spot above blue. Let me get rid of this fib here. It's a bit annoying. Alrighty. Let's see. We did break through this bottom. So yeah, for the moment we have bearish pressure on the 4-hour, bullish pressure on the weekly, bearish on the daily, a mix kind of on the hourly because it was in a range, wasn't it? It was going sideways. So for upside, we would need to break of this top right there, right? Because that would signal the bulls back in control. For downside, let's take a look at 15. Although, as I said, although the weekly is up, we could still see a retracement of the weekly, max to blue, I would say, right? Still some downside before we hit support and then fly up, for instance. So with the 4-hour relatively bearish at the moment, although we still need to close, in fact, below this bottom, to be honest, because this candle hasn't closed as yet. It has been broken indeed, yes, but I would like to see it close on the 4-hour personally. Otherwise, if we have a big wick that with a close above it still, I wouldn't consider it a price action signal or a break that is very interesting. That, of course, corresponds to the fact that we have a pin bar on the hourly. So I want to see the 4-hour which side has control. That's my stance at the moment. If it does close below it, let's take a look when this candle closes. I think 1.5 hours from now, if I remember correctly. then a retracement of this 4-hour candle, or depends on where it closes, or otherwise an immediate with the stop loss above it, for some downside maybe to retest these supports, could make sense as a setup indeed. Let's take a look at the 15-minute chart. So those are the bulls and bear lines. 147.70, a push above that, and a close above that would signal strength. A close below this 147.38 would signal slash 147.39 would signal weakness. What else? If I look at this 15-minute though, I have to admit that the market environment is looking a bit suspicious for a turnaround, because if you look at this spike up, this could be a spike, this could be a retracement like that, because you already have 1, 2, 3, 4, 5, 6 candle not breaking this low. I have some doubts about the control here of the bears, especially if you look at this hourly pin bar here. Let's see. There's one other thing I want to take a look at. Quickly at the pivot points. Monthly pivot point is ahead, is above us, and weekly and daily are above us as well. So with this break, we did break through the daily and weekly, and now it looks like we're hooking back. So that could aid the expectation of downside. So the trigger for me would be to close below this. Kaylin is saying 46.45 for a long. I got a minus 618 at 46.54, so that makes sense. That looks pretty close to that. And also we have an S3 at 147 and then minus 272. So what could happen there is also potential bounce, but that's what happens when the market has had a tight ranging day. The day after it, it could either be another ranging day or really start to break. If it does continue below 147, it might be a pretty good bearish day with another 50 pips down. So tight space with the weekly bullish candle, I would say, and target here and here. Tight space to the downside, but could be worth it if it closes bearish enough and retraces then after that to give some decent opportunity of a decent support, R2R, a decent reward to risk. Let's take a look at the cat Swiss. To be honest, I forgot what we I forgot what we said on it or what we analyzed. To be honest, maybe we were looking at this triangle. That could be it. I'm not sure. But the triangle break did do okay, and you can see how sometimes how good it is to look at price action when it's breaking because at the hourly. Because look at this break had a big wick at the end of the hour. This hourly candle, however, broke with a close above the resistance trend line. So there's a huge difference between those two. This was a false break or a mini false break, and this was the actual break. And that one did nice. Great job, Kaylin. Good job. So if I would be in that trade, I would be cautious because of the divergence between these 4-hour tops, and I would trail stop below, personally, this bottom right here. If that level breaks, there could be some reversal going on. We also, if we get a dip and a pullback and we get, pullback and we get a higher high, but there's divergence on the stochastics, for instance, that could be another way to realize that the divergence here is very powerful and we could expect maybe a reversal. All right, because we have divergence between these tops. So although this was a great with the trend setup, we now actually are closer to another potential, a reversal potential, because we have divergence here between these tops. What we're looking for on the 4-hour, we have divergence. What we're looking for here is a kind of a mini divergence between the local higher highs here, and if that were to happen with these next two tops, then as soon as price closes below the first hourly low, or the highest hourly low, we could maybe see the reversal here. So I don't want it to make it too complicated. Let's go through that. Let's say we have bullish candle, bullish candle, bullish candle, bullish candle, and all of a sudden we have a candle that's bearish, and the next candle closes below these lows, like that. And the stochastics goes up but doesn't cross the 80, right? So we have divergence like this. Well, that is usually bearish potential. In this scenario, it would be reversal potential. So keep that in mind. It could be, not sure if you know about it, but it could be very useful for trading reversals. All right, so take a look at the schematic. Remember, test it. It could be very, very a good way of trading it. Now, the difference here you can see between these tops, right? What do we have? Stochastics is way above 80, right? It definitely isn't below 80. There's not even divergence between these tops. So that's why a close of this bearish candle has less meaning and is less important. And you can see price didn't go anywhere and went just sideways before it continued up again. If you're in long, I would be cautious of that fact. If I would see that happening, I would close my long and take the profit. At the moment, you can be below this red line, or you can even tighten up your stop loss even more and go below these hourly lows. Depends how aggressive you want to be. So what else is going on? Let's take a look. Euro CAD is also moving down nicely. The only thing is there is a bit of divergence between these 4-hour bottoms. So although downside could maybe still prevail, and it is pushing down, it has good momentum to the downside. There's also quite a lot of divergence between these bottoms. So in that regard, if anything, I would still be a bit cautious of downside. I mean, maybe this morning here some short when it breaks this trend line could have made sense, but in general, I would be very tight with this one. I would really chill stop every hourly high, maybe even, because otherwise, as soon as this bottom breaks, we can even put once again the stochastics on our chart. And wait for the divergence between the bottoms here, right? As this makes lower lows, wait for this not to cross below 20, and as soon as it fills, we could see reversal here. So it could be some downside. The question is how much. Now it's not really worth it because we're close to this bottom. Just quickly scanning to see if there's something that, to see the most interesting pair that is could be worth explaining more than others. And at the moment, it seems to be a bit of a mixed picture. Yeah, I don't see anything very, very potentially. Oh, New Zealand dollar. Yeah, that's a good one. Maybe we can take a look at that. We forgot that. And dollar Swiss we still have to look at. Alrighty, this is the Kiwi, or New Zealand dollar in other words. If we just do our basic, trend line analysis, we can see that line. We can see potential for maybe even this trend line like that. Those are resistances in play. Supports, any support trend lines that could be worth keeping an eye on. Maybe this one, for instance. Okay, something to keep an eye on. We do have divergence between these bottoms. 4-hour charts. So we're in a consolidation or correction because price doesn't have divergence and price is going sideways like that. And moving back, the AO is moving back to the zero line. As we can see, it's almost there. So this is a consolidation. Here too, like the Aussie, a close below this 85.55 would probably break this trend line as well. When you connect these 4-hour bottoms like this, a close below 85.85 would probably signal that breakup potential to the downside. As long as we don't break below that, though, price is most of the time making higher highs, lows. We had a bearish candle though, but it could still be retracement. And if it is a retracement for more upside, we would probably want to see a close of the candle above this 85.66. The same like the Euro and Aussie, bearish candle, but bullish break of yesterday's high. Very funny. Here too, very bearish weekly candle making a lower low close. So here too, if price moves up, which it could, I wouldn't expect necessarily a break of 86.53. I would be any longs. I would be cautious when price gets close to that level, because this could be a potential resistance. Same here too, though, is that the Kiwi is also just above support. So it's almost like they're identical in their structure, at least. Maybe relatively speaking, there is some difference in the size. But obviously, this weekly bottom at 85.16 is important too. So sorry for this, if maybe annoying for you to hear these contradictory messages, but just I'm the messenger, just stating the facts. So don't get mad at me, get mad at the market. No, just kidding. But yeah, if we don't break below 85.55, it could still continue with the momentum up, I would say. And if we break above this trend line, we could see some potential to retrace higher. How high? We could put a fib on this upside here. Where are the targets? You can see we have all these targets before we hit the bigger weekly high. So any of those targets could be valid. I always say minus 618 is always relatively on the high, minus 272 is probably a bit on the tight side. I think we'll probably get, if we do break above, we will probably move higher. But so close below blue or close below red, that would signal something here on this Kiwi. How about the 15-minute chart? What's that looking like? Yeah, we can see good AO reading, good momentum, strong correction 2 down to the 78.6 fib, and our price is back above the moving averages, and the moving averages are aligned. So if we do close, pull back, and go, that could definitely happen, or a potential for that, a decent potential for that Kiwi. If Kiwi breaks down, I would say Aussie has a good chance of breaking down too, but depends on the odd New Zealand, because the odd New Zealand was moving down a lot. The Aussie breakdown didn't necessarily mean that New Zealand was going to break down, because the odd New Zealand was moving down. But in general, they tend to move in sync with each other, but it is not a 100% thing because of the odd New Zealand, obviously. So we have to see. But I think in this case they are traveling relatively similar to moment, both moving up. Euro yen, let's see. Good trade. Svorcik is in short, and we can see 1, 2, 3 candles about here. I would say bears taking over. When we have a close below the hourly low, or even here, when a candle earlier, maybe even. And if you put a stochastics on it, you would see price dipping below the 80. Now, one thing about it is that we didn't have necessarily divergence, so that was a pity. But sometimes you can see that that's not necessary. We did have divergence between these tops, though, on the AO. So you can see that diversion is kicking in very strongly in the EJ, making nice lower lows and lower highs on this hourly chart. If I would be in that short, I would probably trail stop it, personally. But if you're looking for TP as well, let's take a look. Yeah, I mean, every time you aim for the L5, I guess there's nothing wrong with it. However, looking at the speed, one could almost expect a bit more to follow through, but you never know with the market. So um, using a TP at L5, I think, is in general never wrong. Depends on your parameters, how you took it, etc. But if you wanted to use a trail stop loss, you could always trail stop, for instance, the hourly highs. But if you think that's a bit too far from current price, you can use the 50-minute highs, for instance, right? And trail stop it like that. Or even add a 5-minute parabolic if you really want to be tight on that, and use the 5-minute parabolic. That's pretty high still, but it will catch up sooner or later. Those are all trail stop methods. So you can use those methods always, of course, not only for this scenario. For those that are not in the EJ, you can use this info for trail stops in general. Adrian is saying nowadays the Aussie had a bearish outlook regarding the fundamentals and Kiwi a bullish one. Yeah, I'm not a big expert here on the fundamental side, so I will pass the message through to Kaylin there. But I mean, historically, Aussie and New Zealand are relatively closely correlated, but obviously, New Zealand has had very bearish mode lately. I mean, last 2 years. Lately, last few months, it's been more sideways though. So I would say probably the chances of them being more correlated are increasing as long as prices on New Zealand is going sideways a bit. Well, folks, tomorrow we'll have a Forex strategy webinar again. So make sure to join us tomorrow if you like, if you have time. It's same time, same place. We also have, yesterday we had weekly Forex recap with Nenad. Tomorrow, Wednesday, we have not only Forex strategy, but also Nenad again with the money management. He's going to talk about compounding. And Thursday, we have 2 webinars again, Fibonacci trading and our, let's say, educational webinar in the Thursday evenings, as always, measuring the strength of a breakout. Cheers, Bob. See you soon. And hopefully all the others as well. If you have any questions still, by all means, let me know. Otherwise, we'll slowly but surely wrap it up. Dollar Swiss we can still look at, by the way. Forgot about that. Dollar Swissy, right at resistance. I wouldn't be too interested in that. Also, there's a very small movements, low average true range, low volatility. It is breaking the H3 short though, but I'm pivot. Gold, we can take a look at gold, sure. It's stuck in a big range, isn't it? It's just a tremendous consolidation. It's huge. It's breaking out, in fact. Wow. I don't really trade a lot of gold, so I just keep an eye on it for informational purposes and do some charting on it once in a while. But maybe not breaking, but it's definitely trying to push through this line. It depends how you draw the line, I guess. If you draw it like that, it's actually breaking through it. It was a big triangle, wasn't it? So on this daily, broke yesterday's low. It's trying to break the bottom here. 4-hour chart definitely has momentum to the downside. So does the hourly. I would say let's see how today's candle closes. If today's candle closes pretty low, near the low, bears remaining in control of today, and could always wait for a hook back of today's candle. A retracement of today's candle for more downside, I mean. All right, maybe back to this blue line. For instance, a break, pull back, and go. Just something to consider. Otherwise, I'm not sure, of course, how you were, what you were particularly thinking of on this, which time frame you were looking at, but that's something that could could make sense. If you want to trade it today, not tomorrow, then let's see. I would want to see the AO on the 5-minute chart back to the zero line, to be honest, like this. And then wait for some potential turn for more downside. That could still make sense today. Adrian is talking about gold. Adrian says it could be a bit more friendly in its movements. It doesn't move too much, not as volatile. Let's take a look at XAG. And it's not that symmetrical triangle that we saw in gold, that's for sure. It more looks like, if anything, a potential descending wedge. Or if we look at the 4-hour chart, something like a sloppy, weird-looking triangle that is also about to be broken. Here too, the same story could be, wait for the daily close and wait for the daily retracement tomorrow, or probably wait for a 5-minute hook back to the zero line, or even 15-minute hook back to the zero line. One of the two, or both. But definitely bearish mode, definitely bearish price action, definitely trying to break through this consolidation and this triangle, or broke through it already, depending on how you draw it. Weekly candle, obviously we have a bit of a mixture, but we have wicks on top. We don't have any directional lower lows, lower highs at the moment. It's definitely a triangle, but we can see we're close to breaking last week's low, or maybe we already did that. So, but not really a fantastic amount of movement here, unfortunately. Let's see how today's candle closes. If it has a relatively big candle, maybe a bit bigger would be nice, with a close near the low, could signal that momentum back in the market. Sorry. Alrighty, folks, don't see any questions. Let me just take a last look together with you here at the euro. Still choppy, still bearish momentum on the hourly though. Pound making that bigger correction, as we said, waiting for it to get back to the zero line on this 15-minute chart. And we probably do have that divergence here on the stochastics between the 15-minute chart. So, yep, you can see a clear move above the 80 here, and this one is failing to go above 80. So in that regard, I wouldn't be surprised to see a bigger consolidation. Well, folks, that wraps it up for today. I hope to looking forward to see you in the other sessions as well, and wish everyone a great trading for the remainder of the day. Let's see how these things, set themselves up. Always, a bit have to be a bit cautious with the early side of the trading day, because price tends to make some movements up and down before you get maybe a directional guidance. So always, it never hurts to be a bit more cautious, I would say, at the start, and see how things warm up, see how things break up or break to before trading it maybe later in the day. So especially after a bank holiday yesterday, it's kind of like a half a Monday today, right? So in any case, good luck trading though today, and talk to you tomorrow. Cheers.